The European Central Bank just hit the pause button. After a full year of steadily cutting interest rates, they have gone quiet. The stop is driven by two factors, and I'm going to break down what they are and what this pivot means for your stock portfolio in both Europe and US. Hi everyone, this is George. So let's discuss the recent ECB's decision. The first reason for the pause is the good news. After a long fight, inflation in the eurozone is finally back on target. June 2025 numbers confirmed inflation is at 2%, precisely the ECB's goal. This came after a steady cool down in prices that allowed the ECB to cut rates 8 times since June of last year. You should think of it like a doctor treating a high fever. Once the temperature returns to the normal, the doctor pauses to observe and let the patient stabilize. That's the ECB's strategy. With inflation at 2% and the eurozone economy holding up, policymakers feel they can take their foot off the accelerator. So the main deposit rate will hold on 2% and the main refinancing rate stays at 2.15%. So, overall, they've cut the key deposit rate by half from its peak and are now shifting into a wait-and-see mode. They aren't promising future moves, they don't use forward guidance, as we say, stressing they will be guided by the data on a meeting-by-meeting basis. The second, much darker, if you want it, reason for this pause is the uncertainty of a trade dispute with the United States. This wild card is forcing the ECB to be extremely cautious, as the threat of major US tariffs on European goods could throw the fragile economy off balance. While negotiations are ongoing, the public threat has been for tariffs as high as 30% on all EU imports. There are also market whispers of a potential deal settling closer to 15%, but nothing is official. This ambiguity makes it nearly impossible for a central bank to lock in a long-term plan. A trade war pulls the economy in two opposite directions. Tariffs could spark inflation by making US goods more expensive, but they could also slam the brakes on growth by hurting European exporters and boosting the euro. A stronger euro makes European products less competitive globally. Faced with such a messy and unpredictable scenario, pausing is the most logical move to keep their options open. This silence from Frankfurt was met with a cautious market reaction, with a wobble in European stocks indices like the DAX as investors digested the risks. For European companies, especially large exporters, this is an anxious time. A stronger euro paired with new US tariffs is a 1-2 punch that could squeeze the profits. This is why the ECB is focused on the currency strength. While the ECB is not targeting the exchange rate, a rapid appreciating euro could force them to start cutting rates again, just to relieve the pressure. So the main takeaway for anyone invested in Europe is that uncertainty now is the king. The ECB has been clear. Its next move depends entirely on new inflation numbers and the outcome of these transatlantic trade talks. The decision sends ripples across the Atlantic as the ECB's cautious stance is a major signal for the US Federal Reserve. US stocks futures dipped right after the announcement, showing how tightly connected the global financial system is. The real issue is policy divergence. If a US-initiated trade war forces the ECB to cut rates again while the Fed holds steady, it could trigger a major shift in capital flows. Money chases higher yields, potentially flowing out of the euro and into a stronger dollar. For US investors, the ECB's pause is a powerful reminder that global factors, especially trade policy, are driving the market. These tariff negotiations are a key variable for central bankers on both sides of the ocean. The health of the European economy is critical for American multinationals, and any slowdown in Europe from trade friction will eventually show up in US corporate earnings. Making sense of these complex market-moving events is what I do. If you want to stay ahead of the curve and understand how global forces affect your money, subscribe and hit the notifications bell so you don't miss my analysis. So, overall, the ECB is on hold for two big reasons. They've hit the 2% inflation target and they are facing the threat of a trade war with the US, making any big moves too risky. This decision to wait creates a tense period of uncertainty for investors everywhere. The future path for interest rates is now completely tied to trade talks and inflation data. The ECB isn't committing to anything, which means we all need to watch the numbers as closely as they are. What do you think happens next? Let me know in the comments below. See you all next week for the Fed's decision, which I think will be to hold steady again and cut rates in September. But we will see. See you all. Bye bye.